it's a live video. Here we are with MMTs taking that short reversal again. They took their first short reversal turn over here and got their profits and their limit out. They do know that the qualifier will be a 2 teeny reversal here, right, Mr. Flag, right, Mr. Gibson? And
Yes,
to answer, and your entries are paying you money. So now, this time, like I said on this reversal live, you would limit out again into strength. So here's what I would like you to do in a common denominator. If we break that teeny line, throw this limit out at $1.45 right now on a limit out. The qualifier is you have to break below this diamond here, and this is the reversal qualifier, but you have to have another bar that goes below here and continues to drive it down. And to drive this value up, Mr. Flag and Mr. Gibson, but you have to break this whole area right here, this diamond, this body. This is live right now in the market, and you're doing quite well in your entry. And so basically the time is 10:59. It's a monthly triple witch, quadruple expiration. And the thing about it is, it's the last one for 2011. So look at what is going on here, Mr. Flag. You got these 2 diamonds. You need the next body to close lower below the double diamond reversal. Does that make it clear to you?
Yes.
Okay.
Sure,
you see how the body is going below the diamond? So
yep.
That would make your value go higher in that put option you just got down there and limiting out into strength like you did the first time, right, Mr. Gibson?
Yeah.
All right. What's the real qualifier after this bar is the next 3-minute bar needs to continue the same distance. Another one of these would have to happen. Okay? If they do, see, you don't want that diamond right there to hold. It must turn red. If not, you just simply sell out at 95 cents on the uptick, and they'll take your order. So limit out at 95 pennies. Limit out at based on that wick. So you don't want to take the risk. And you throw your limit order out at 95, then you confirm when you've done it, just in case you break above the bar. And because we could reverse, just like we did here. We came up, we did that reversal, we exited it. I could see that you exited it at 95 cents, and you were in at 70 cents. What was your entry?
80.
80 cents, and what was your exit?
My entry's at 75.
What was your exit?
It isn't exited yet.
Well, it's going to go below your value because it turned. So that would not, that's a failure. You were told to limit out of the order.
I had it out there, but it didn't.
You have to make your adjustment on the execution. There was plenty of time to do it. Your co-partner, Mr. Gibson, did it. So, sell it. Because the move has changed. He's there at 70 cents. Part with it. Now, you still always have the way to limit out based on that tick. You got to go below 45 here, and this has to drop down toward 1.00. You do have a turn and a wide bid and ask on a monthly expiration. We are live right now. So the art of limiting out is that this bar must go down 2 teenies to qualify. Okay? To qualify. So if you sell down 2 teenies, then you qualify. And it's 11:11. We still have time for the expiration. And you can limit out of risk by simply throwing the bid out at 470, contract the bid and ask, and you will get filled when the tick goes your way. And you can remove the risk and then get back below a lower range of entry during this phase right here. Because you have now here's your diamond. So you were in control of limiting it out, but not having to be limiting it with fear. So, did I answer? Go through the question again that you asked and how you just resolved it.
Well, I
Go
guess
ahead.
my question was, how do you get into a move without chasing it on the option price? And even when you do chase it, I didn't. You answered my question by paying 10 cents less because I would have paid, $4.90 or something.
Right.
And so when you pay up like that, and then it goes the other way, you see, I guess when the
You
thing
gotta
is
wait
these
the
smaller
bounce.
moves,
Yeah.
you never know how long they're going to last. They might be only 3 minutes. They might be 9 minutes. They might be 60 minutes. You
Right.
just don't know. And so, the best is to be in below the market before the move and
Right.
buying on the bid and then
Yeah.
flipping it, selling it on the ask.
Right. And that's exactly what you did. So why don't you go back over here, based on where your platform is, it's above 45, and simply throw a lower bid out now at 410. So that way, if you pop up and it reverses, or because you're right there at a key reversal, the whole thing of it is what that reversal confirmation is about, and it's about two teenies. So there's one. You need another one to confirm it. As you're getting that, once again, you're still floating in that same bid and ask, like you said. Do you see it live there, sir? Do you see it live there? See, now it's 80 by $5, but see, you do have a teeny reversal.
My
What-
AOS just froze up.
Okay. Here we are live. What are MMTs going through? This was the reversal that they traded. Then they went long. However, there is a reversal here, and it's a 3 teeny rectangular consolidation, and it's closing down toward the bottom. The qualifier is there must be a huge red bar that would be like this as a secondary bar. Yes, the diamonds are right across this major area of the support level as it is. This must drop down below or towards 25, and this would have to drop below 1.00 and start going and losing its ratio here. It is an options expiration. Once again, it's validated with one common denominator. The common denominator is that there is more weakness building at the lower teeny line before a drop. And these calls and put options here are at their lows. If we break down here, then these go immediately up in value and limiting out into strength. Again, how to trade a monthly quadruple witch calendar year event, both looking at the 625 puts, and let us not forget the 625 calls that are right here. Here they are. And we want to highlight that 625 call because it's an important one, that if this side of the market doesn't work, then this side of the market will work. Now we're going to look for this side to go up, and we're going to look for that 625 call. Okay? That's that put and call. And we're going to see what happens here. So here you are, right here. You got your 625 call, and you're trading at 624.90. 81, they're printing down that bid size. This is live. It's here. It's now. It's 11:30 a.m. Pacific Standard Time. And once again, always the MMTs are making the engagement of making money based on either one of the sides of the market. Okay? In an options expiration. When you're closing at that lower diamond, it struggles in the teeny structure at 33 cents per line. So, here's the call. Calls and your puts. There's that diamond support. 80 by 90. They were 39 cents on the low. Look, they were 4.90 on the high. 11,000 contracts traded right here. Now, on the flip side of that, the volume here is 12.6 and 11.6. It's 80 by 95. This is not, now when this goes down in value, these will go up in value. Watch carefully. The market maker platform is not closing below the diamond. In fact, it's holding this diamond support level, and not only that, it's holding the original breakout right here. Yes, we are at the lower end of the closing price for the MMT market maker. So the call is holding 95 by dollar, and this is 85 by 95, and it's all because of that rectangular 3 consolidation and learning how to make that market between the buyer and the seller and directional price movement. Google goes higher, well then the call would go higher and this value goes down.